All right, ready to dive into something pretty cool.
Always. Let's hear it.
So we're tackling the non-farm payroll report today.
Hmm.
You know, the NFP, the big jobs number everyone's glued to each month.
Right, trying to get a feel for how the U.S. economy is humming along.
Exactly. But here's the thing. Turns out it's not just about the raw numbers. Like how many jobs were added or lost.
There's more to it. I'm intrigued.
Oh yeah, way more. We're diving into a strategy some traders use called the V-shaped reversal. Catchy, right?
V-shaped reversal. Okay, you've got my attention. Lay it on me.
So picture this. The NFP report drops, and the market goes a little nuts, buying, selling, everyone trying to react first.
Yeah, that tracks. Big news usually means a flurry of activity. Everyone thinks they can outsmart the market.
Exactly. But that initial frenzy, that's where the opportunity lies for those playing the V-shaped reversal. They're not jumping in right away.
They're waiting for the dust to settle a bit, right?
Exactly. They're looking for a specific pattern to emerge. That V-shape on the price charts. It's all about capitalizing on that moment when the initial reaction fades and the market sentiment starts to do a 180.
Okay, I'm starting to see the V here. But to really get it, let's break it down with an example.
Perfect. Let's say the NFP report comes out and boom, it's way stronger than anyone expected. What's the typical knee-jerk reaction?
Well, usually the U.S. dollar gets a boost, right? Safe haven currency and all that. Good news for the U.S. economy often translates to a stronger dollar.
Makes sense. But then things get interesting.
Because a strong U.S. economy doesn't always mean everyone else is lagging behind. Sometimes it actually helps lift other economies too. Think about it. If U.S. consumers are confident in spending, that increased demand can benefit businesses globally.
Oh, so like a ripple effect.
Precisely. And that's when investors might start thinking, maybe I should diversify, look at other currencies, and they start selling off some of those U.S. dollars.
And boom, that's our V-shaped reversal forming.
You got it. The dollar, which initially strengthened, starts to weaken as investors shift their focus. And you see that V-shape on the price chart. It's about recognizing that potential shift in sentiment.
Okay, so how do you actually spot this V-shaped reversal as it's happening?
That's where the real skill comes in. It's not an exact science, but there are clues. Our source mentions the hammer candlestick pattern.
Ah, candlestick patterns always sound so mystical to me.
It's just a visual way traders use to analyze price movements. A hammer often suggests a potential reversal is brewing. Imagine it. A short body, long lower wick like a hammer, right? In this case, it might pop up after that initial dollar surge, hinting that the upward momentum is fading.
Gotcha. So you're not trying to time the NFP report itself. It's more about reading the market's reaction afterward.
Spot on. And this is where risk management comes in. Just like any trading strategy, the V-shaped reversal isn't foolproof.
Right. The market always keeps you on your toes.
Exactly. You need a plan, know where to set your stop-loss orders. Think of it like this. You're spotting a potential wave to ride, but you also have your surfboard leash on, just in case.
Love that analogy.
Yeah.
So for our listeners who are now fascinated by this V-shaped reversal, what's our takeaway?
Don't just chase the headlines. Dig into historical NFP data. Study those price charts. Learn to identify those reversal patterns. And of course, never forget the importance of risk management. The market can be a wild ride.
Absolutely. Understanding how to ride those waves, that's the key. And who knows, maybe the NFP report will become your new favorite trading event.
Or at least a chance to practice some serious chart reading skills.
Exactly. All right, that's it for our deep dive today. We'll catch you in the next one.
Until then.